Hello, guys. So today's guest is Santiago R Santos. He's angel investor and quite active in the space. Great to have you here, Santiago.
Hey, Anna, it's great to be here. Thanks for having me.
So can you tell us about your journey in crypto? How did you how did you know out about Bitcoin? Which year was it?
Yeah, so I got first discovered Bitcoin in 2012. At the time, I was at JP Morgan doing investment banking, and my background's in game theory. So when I first read the white paper, the Bitcoin white paper, and sort of learned about the Nakamoto consensus, it was kind of an eye-opening experience. And since then, I've been involved in this space in a number of capacities. Most recently, I was a partner at ParaFi, and we were really probably one of the, if not the earliest, kind of fund to be very focused investing in DeFi and using DeFi protocols. And over the years, it's been fascinated by the space in terms of the human capital. Like the smartest people that I know keep coming in, are in crypto, and increasingly so. And I think to me, that's always been what has kept me interested and motivated to be here. This space is not perfect by any stretch of the imagination, but we are trying to solve really hard problems, and that generally, I think, attracts smart people. Always want to work on difficult problems with the potential to really have a big impact. For a long time, I was just investing in software and technology. I love that, and I can't think of for me, like, I think crypto really is one of those spaces that has the possibility to transform so many industries and really create so much good and improve so many different systems, finance, the way we think about money, the way that we relate with governments, and the way we cooperate and coordinate as species, really, in a very interesting way. And that unlocks so many different use cases. And so it's been fascinating to see that evolution over the last, I guess, 10 years.
So you came from the traditional banking space. When you discovered Bitcoin in 2012, did you get the value of Bitcoin at once, or did it take some time to understand what that?
It's a great question. So for me, I grew up in Mexico, and I knew the remittance corridor there. Like, sending a lot of Mexicans send money back home to Mexico, and they use a service like Western Union, and they get charged 7 or 8%. And I've been thinking about that for a long time and said, well, it feels really unjust. It feels really inefficient. There's really high fees. And I've been exploring ways to do that in a more efficient way using technology. And so Bitcoin for me really solved that in a very interesting way. And so as soon as I learned about it, I went out and bought a bunch of Bitcoin and said, look, I'm going to send this to 10 different people. And if at least 5 or 6 out of the 10 can, receive Bitcoin through a QR code. This is a time where BlackBerries kind of existed, and they were very popular in Mexico. And so I said, if 6 out of 10, can convert it to local currency by me using dollars, buying Bitcoin, and then they receive it and convert it to pesos, then I think there's something here to disrupt at least the remittance business, which is the second largest source of income for Mexicans and so many other people in the world. And so that I saw the value proposition of Bitcoin then and there. And I said, okay, this is super interesting, at least as a more efficient payments rail, because finance really breaks when you try to move money cross border. It's super inefficient. It's very expensive. It continues to be, really. And so that really opened my eyes to the possibilities of Bitcoin could solve.
Yeah, Bitcoin crypto is quite a great solution for cross-border payments, for remittances. And for example, we have example of El Salvador, the first country which adopted Bitcoin as a legal tender. What do you think about this case? Do you think that other countries should follow El Salvador?
I think it's a very interesting. I think we are entering this phase of crypto of like geopolitical game theory, where countries move away from something like the dollar and move to a more neutral system, paradigm, and standard like Bitcoin. Obviously, a lot of countries, in not only in Latin America but across the world, use Swift, use the dollar, and settle stuff in dollars. And in their reserves, they hold US dollars because, look, to this day, the US dollar continues to be kind of like the safest asset, treasuries. And but you didn't have something. You didn't have Bitcoin until recently. And so it is a very interesting experiment. I think as countries say, hey, why wouldn't you want to have a non-sovereign, kind of more neutral store value, if you believe that, as a reserve asset in your reserves as a central bank? And I find that really interesting. Obviously, El Salvador is a very you could argue, a small country in the grand scheme of things. But I think a lot of other countries are paying attention to what is possible. I've been in conversations with central banks in other countries that are looking at El Salvador as a very interesting experiment and considering something like Bitcoin or other assets, be it Ethereum or Solana or what have you, but predominantly Bitcoin, and saying, why shouldn't we have some Bitcoin as a reserve asset? You know, they hold dollars, they hold gold, they hold maybe other precious metals, maybe other currencies like the Swiss franc and the British pound, but it's predominantly dollars. And when you think about, 60%, 60+% of all dollars in circulation have been printed over the last year and a half. I mean, that doesn't end well historically. And so, but at the end of the day, most people say, well, it's sort of the least of the worst, right? Because you want to hold dollars if you believe that, as a safety asset. It's been the least of the worst. It's still relatively the safest. Everything is very relative, right? When you hold something like a currency. And so that from that perspective, I think it's very interesting. Other countries, I think, will continue to. I think El Salvador is not singular. I think more countries will invariably venture in and start exploring, if not already. Maybe they're not public about it. But you've had something like Bitcoin has existed now over the last 12 years, and if you believe it, it's certainly still very volatile. It certainly is very still early. But if you believe that it can become a credible store of value, then I think by default, I think other countries will follow suit.
You mentioned that maybe some countries use it, but not publicly. I guess it's more relates to the merchants and how merchants adopt crypto and Bitcoin.
Yeah, I think like this narrative of Bitcoin being used by merchants is okay, fine. Like, you don't use gold to pay for coffee. And I think, the narrative of Bitcoin initially was, okay, this could be used for payments. And I think a lot of people are stuck in that mindset. But I've never used Bitcoin for that. I've never considered Bitcoin something that I use to pay for goods and services. I think of Bitcoin as, and I think more and more people, the consensus is you think of Bitcoin as gold, digital gold, as a store of value. And a store of value is, is not like a payments system. I think, it's very, okay, fine. It could be a payments rail, the same way that I transacted, converted dollars, use Bitcoin as a payments rail to then convert to pesos. And you can hedge the volatility. You can do that. But I think for that purpose of payments and merchants, I think you're better off using, stable coins, which we have now, right? When Bitcoin first started, we didn't have all this other alternatives like digital dollars, stable coins that could be denominated in any other currency. They're just a better way to doing business. So I think more and more merchants will gravitate towards, so folks like Visa, MasterCard will start using stable coins. You could argue which type of stable coin, is it regulated, is it not regulated? Meaning, is it fully decentralized, like, something like Terra or, Rye, or are you thinking more of like a hybrid model, like DAI, or like USDC, which is, backed dollar for dollar in a bank account, and it is regulated. And so, but I still see, back to Bitcoin, I think Bitcoin will not really solve the merchant kind of, you pay for an airline ticket with Bitcoin. I think it will. I haven't looked at the numbers most recently, but I would argue that it's a very small fraction of the users, and the flow of Bitcoin is kind of really not used for payments. It's more so a store of value.
So we see as well governments as well try to embrace digital asset space and developing central bank digital currencies. So how do you see in the future competition between stable coins and central bank digital currencies?
It's a great question. It depends, I guess, on the type of stablecoin that really gets a lot of adoption. Certainly, if it is kind of fully decentralized, then you could argue that it's sort of fulfilling the role of a central bank in a very algorithmic way, or non-sovereign way. Like, it's not tied to a particular currency. But I would still argue, like, I see it as a layer on top of that, right? Ultimately, like, you price goods, you price things in dollars or in euros or in pounds or what have you. And so at least for now, I don't anticipate a version of this world where we start pricing and denominating stuff in something like Ethereum or Solana. Now, it's certainly possible. Like, a lot of NFTs are priced and denominated in like these floors are, most people think of them as like in ETH or SOL terms. So it would be interesting to observe that consumer behavior, right? If you think about the goods that you're purchasing in the metaverse, then probably that economy, you will be pricing that in digital currencies like, you know, Ethereum or Solana, or Atoms or whatever. But still, for some of the other stuff, you know, perhaps not in the metaverse, I think you will continue to think of that as stablecoin in dollar terms or euro terms, like in the actual, in real life, in the meat space, like you pay and you think of your, call it your net worth in fiat, in whatever currency, because that's how you think about inflation. That's how you think about like sustaining your lifestyle and paying for stuff. And so invariably that leads me to think that most of these stable coins will be something like USDC, right? Which is regulated. And I think it furthers, if you're a central bank, if you're the US government, like you probably want to be pro stablecoin like USDC, right? Because there's nothing better than increasing the demand for your local currency. And USDC has done that, right? For every dollar, for every USDC in circulation, there needs to be a dollar that is in a bank account. So it's fully collateralized. And so if you're the US government, then that's really positive for you. If you're the central bank, then that's great, right? Because a lot of the world continues and will probably in the near future want to hold dollars. And USDC is just a vehicle to facilitate and satisfy a lot of the demand that exists out there. But think about how many people want to hold dollars but can't hold them, or don't want to. But now you create a digital derivative, let's call it that, or like a digital dollar that is represented and backed by a physical dollar. And so that increases the ability to satisfy a lot of the demand for dollars that continues to exist in the world. And so for that reason, in this example, then I think central banks would be pro stablecoins like USDC. Maybe they would, I could see how they would not be very favorable to more decentralized versions of stablecoins that, you know, are backed algorithmically, like, you know, like this is like Basecoin Experiment, or like, you know, or Terra, or some of these other stablecoins that are not kind of backed and fully collateralized like USDC.